Alright, welcome to the channel. This is Business of Brothers. Today, it's just the one brother. The name's Basil. And I'm going to be showing you over the shoulder look at my portfolio, all my investments, and why I'm selecting the stocks I'm selecting, what I think to them, where I'm forecasting to go, and obviously documenting the real results. Everything's real money. It's in my personal ISA. I'm starting small. I'm just an average guy at the minute, aiming to do some big things. I love the world of investing, find it fascinating, love looking at all the company balance sheets and whatnot. And hopefully we can take you through a little journey, documenting the process and seeing what results we can get. So I'm going to overlay on the screen now my first purchase into my ISA, and that is going to be of £1,000, 1,000 Great British pounds, and it's going to be in the company of Meta. Now, I know immediately, Meta is expensive. I know. It's a fantastic company though, and I just want to run you through some of the reasons as to why I have selected Meta. So I'm currently on the platform of Qualtrim, courtesy of Joseph Carlson, fantastic guy. I suggest you go and watch some of his stuff. Really, really inspired me to start doing this kind of things, and he does some really, really good videos. So highly suggest go and take a look at his work. But yeah, let's go down here, and this is what Qualtrim is showing. So revenue year on year, we can see year on year it's just growing. It's gone from the bottom left to the top right. Fantastic thing that we want to see. If you're interested, it's for the last 10 years, year on year, it's grown at nearly 30%. Last 5 years, 18%. And then as of recently, it's been doing well. Obviously, it's quite heavily into AI now as well. And they've got the Meta Vision and whatnot, which I believe will be a growing revenue driver in the future years. Revenue by segment is going up. Obviously, we've dropped a little bit here. We're in September now, so if we go quarterly, you'll see again it's just driving upwards. Let's go back to annually. Annually, there's more and more daily active people on Facebook. I've used Facebook. I've used Instagram. I'm a consumer and a producer on there. Not only do I advertise on there, so I understand the business side of things, the producing side of things, but I also understand the consuming side of things. I think it's a really, really easy business to understand. Earnings going up, net income the same, free cash flow, this is something which I'm interested in. Year on year, it's growing an average of 31% as well, which is very, very in line with revenues. So that's great to see. Earnings per share, again, fantastic, doing similar numbers. Last year, 60%, previous 2 years, 66%, and we're averaging probably around the 32% for the last 10 years, 5 years, around that mark, which is it's just crazy. It's a very, very cash-heavy business. It's generating a lot of earnings. Again, looking at the balance sheet just quickly, we're positive 18 billion. We're nearly at just shy of a 2-to-1 of cash to debt, which I think is always great. Great company. Now in dividends, they've just started paying dividends in 2024. So 2024, we've got a flat 5%, which again matches or just outpaces inflation. If we say inflation's I'll say healthy. If inflation's 4%. So we're getting some dividends paid now, which is nice to see. They're buying back a lot of common stock, and some of it's going to dividends. So again, as we're getting to a slightly more mature company for Meta, it seems to be doing quite well. Carrying on with the financials, shares outstanding. They are reducing the number of shares outstanding slowly, as we can see there. Last 2 years have been 1.64% year on year, which isn't anything outstanding. Again, it'll do quite nicely to stave off that inflation. However, because we are trading above book value per se, if you want to look at the Benjamin Grahams and the whatnot, as we're trading above that, some people would argue it's not the wisest thing to be buying back shares at these prices. However, saying that, it's a fantastic company, so buying it at most prices, you're going to see some kind of return. So I'm not mad at this. I'm actually quite happy with this. And in terms of ratios, return on capital employed is a massive one which I'm looking into, and we can see obviously it's been a bit all over the place, but I would like to take a rough conservative estimate of around 20%. I mean, 2024 we got 30%, nearly 30%. 2023 we got 24%. So anywhere around the 20 to 25% mark is really, really strong, and as of recent we're seeing very, very high returns. Gross margins, operating margins, obviously they're good, but profit margins is what I want to be looking at as well. 38% profit margins, gross margins again still really, really high. So it's a very, very cash heavy business, and I believe that here's some of the risks that we're dealing with here. I believe that Meta is a fantastic business, and it's one of the companies which I would be more than happy to own and own a percentage of for years to come. It's not one of those ones which in 2 years' time, if I see the share price dipping, I'm going to think about selling. I'm going to be buying more. So this is why this is my first business, and I'll bring up some estimates on my analysis with this in a moment. So you can see it's been growing exponentially, and if we take a fair estimate and say for the next few years, I'm not trying to predict 10 years. I think 10 years is too long to predict personally. 5 years for me feels much more foreseeable. And we take, let's say, a conservative estimate of 25%, which is less than the 5 year, less than the 10 year, and significantly less than the 1 and 2 year. So if we take 25% earnings per share growth here, and return on capital employed, as we saw before, I'm just going to pull it up again so you guys can see it. Return on capital employed was 29%. Again, I'm going to say 25% just to be on the conservative side. 25%. So based off this table and the fact that earnings per share growth is literally increasing by 2% each time, and you can see the differences it's making at this rate of invested capital. By the time we hit 25%, I think it can go much higher than this. However, I think 36 for a PE is very, very reasonable, especially considering conservative measures here, which would put the fair value price around $1,100, which is what I've estimated here. Now, I've taken 20% off for a margin of safety, so to speak, and I've added 20% on top of that to say it's overvalued. So that would deem to me that my fair value price for Meta right now is around the $1,100 mark. Anything underneath that I'm deeming as undervalued, and for right now, considering it's such a strong company, considering it's producing high returns on capital employed, it's producing high earnings per share growth, it's significantly positive in the cash to debt ratios, and it's in such a strong space. It's got the sprinkle of AI on top of that, which can, obviously nobody knows how far AI is going to go, but it gives me much more hope for the future. I think the current price of it's $779, even though it is pricey right now, I agree, and the fact that it is the highest of all time, I agree again. Deeming right now it's the highest of all time or very, very close to it. People would be saying this is expensive. For me, I'm buying a quality business. It's only £1,000. It's the start of my investing journey. I think this is one of the strongest picks that I can choose right now. And based on this is why I've chose it. So let's see how this selection performs. Let's see the returns that I get from it. I will keep you updated with the holdings. And yeah, if you find any of this useful, let me know in the comments. If you're interested in following along with the journey, hit follow, hit subscribe, and we will go from there and hope to see you next time. Thank you for watching.